Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar ended marginally lower on Wednesday and backing away from the 60-day moving average seen around 63.30 as the hotter than expected US inflation reinforced Fed Chairman Powell's stance on no rush to cut rates. The CPI rose by 3% year on year, slightly higher than the 2.9% forecast, while the core CPI hit 3.3 with forecast at 3.1%, dimming hopes for an early Fed rate cut. Powell reiterated inflation remains above target, justifying a restrictive policy. However, he noted the Fed preferred PCE inflation, which runs lower than CPI, with January's PCE due February 28. Traders are now expected just one rate cut in September, and therefore it's helped support the US dollar. Nevertheless, looking at the technicals though, although they have somewhat buckled, and I did warn that we could see a slight exhaustion pattern coming through due to the 60-day moving average that we see back here in October, and now backing away could see a move towards 62.45 or as low as 61.75.85, and then I expect to see the surge through the level of the 60-day moving average and on towards 64 to 65 cents. Turning to the euro, the market was relatively strong as it breaks above 104 and now looks to 104.40.45. A break there should give further scope to the upside and look towards 105.20 to 105.70. Any pullback likely to see support or demand from 103.50.60. Slightly stronger stance coming through for dollar yen as the market rallies on to 154. I do feel there is a little bit of caution played here due to the fact that we could see a snap from the top side and a bearish ambush that would send the market lower back towards 150, and the call still remaining around the region of 149.30.60 and reassess. Looking at the pound, the market holding for the third consecutive day, and I still like the way this pattern is set up for a further gain, and that is on towards the region of 125 to 126. The market is likely to hold in this pattern with any weakness expected to see support around 123.80 to 124.35. A rebound in gold, and the market still looks destined for that $3,000 mark. Nevertheless, when we look at the technicals, we can still see that the fact that there is still a few little hurdles before getting to that 3,000 mark, somewhere around 2,945 to 2,960, and then 2,880 to 3,000. We can see the trend line support here comes in around 2,886 to 88, and beneath there, much deeper, around 2,800 to 2,820. Wrapping up with oil, the market was weaker and giving back 2 days of its gains as pressure returned to a potential peace talk between Russia and Ukraine after President Trump stated that both sides expressed interest in peace, prompting him to order top US officials to begin negotiations. Nevertheless, from a technical point though, still looking at that support level, which comes in around 69.60.90, and while intact, I anticipate the potential bull run on to 73.30 and reassess from there, as the break will give us 76 as a target. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed a great start to the day.